Good morning, Mark Soderberg with ADM Investor Services with your morning ag market outlook for Thursday, December 12th. Well, rather quiet trade across the ag space here overnight. Corn right now is steady to about a penny lower. Bean prices are starting to firm up here a little bit. At session highs up 2 to 3 cents. Products are mixed, slightly higher in the meal, slightly lower in the oil, while wheat prices are pretty much 1 to 3 higher across all three classes. Malaysian palm oil was up just over 1% in overnight trade. We had speculative traders, pretty much light buyers across the entire ag space yesterday. We had them buying corn now for the past 5 sessions, extending their long position to about 135,000 contracts, which would be the largest position in nearly 2 years. Still short about 65,000 contracts in beans and meal, 58,000 in the wheat, while long about 15,000 contracts in bean oil. Open interest in corn did surge another 32,000 contracts yesterday, an indication of new speculative longs coming into the market, while a pickup in farmers selling take advantage of the price jump to 2-month highs. We do have export sales later this morning. Expect another strong week of oil sales as its price relationship with palm oil remains historically wide. The recent uptick in corn values here in the U.S. has narrowed its price advantage in the global marketplace. However, expect demand to remain pretty strong till we have a better handle on Brazil's second corn crop. We did get production updates this morning from in South America. Very little change in the Brazilian forecast from CONAB. They have soybean production at 166.2 million metric tons. That was up fractionally. Their corn estimate was lowered slightly to 119.6 million metric tons. That's well below the USDA estimate of 127. They also lowered their wheat production to just over 8 million metric tons. And in Argentina, the Rosario Grain Exchange, they raised their wheat production forecast about 500,000 metric tons to 19.3. That's well above the USDA's 17.5 million metric ton forecast. They also kept their corn and soybean production ranges unchanged at 50 to 51 million metric tons on corn, 53 to 53.5 on beans. And those are pretty consistent with the USDA estimates here earlier in the week. The recent move in March corn above the $4.50 level did stop just shy of the October high at 452.25. Yesterday, we did see a modest uptick in ethanol production from the previous week, and overall production still remains above the pace needed to reach the revised USDA forecast on corn usage at 4.5 billion bushels. I don't think we've seen the highs just yet. I would expect to move up. I have an upside target of 470 by year end in March corn. Jan beans have fallen back into that $9.75, $10 range. This month's high and the 50-day moving average do provide overhead resistance, both very close to 10.03. That said, however, I still feel the path of least resistance is to the downside with the favorable South American weather forecast. I do have a downside target of 9.35 early next year. Spot meal continues to hover right around $290 a ton. I would expect a retest of the 2020 lows at 280. Nearby spreads did weaken to new lows here yesterday. For now, Jan bean oil has rejected trade below the 42-cent level overnight, with prices back near its 100-day moving average at 42.32. I do look for oil to outperform meal. Tight global stocks should keep a pretty good floor support under the market in wheat. So far, however, still searching for that catalyst to ignite more of a short covering rebound. I would not be surprised to see a 580 as upside target for March, Chicago and Kansas City, where we have moving average resistance. We do have Saudi Arabia tendering for 905,000 metric tons of wheat due tomorrow with delivery for next year. Thanks for listening, everyone. Have a great day.